Hello again, everyone. In topic 6, we are going to discuss understanding the practicality of cost behavior in accounting context. Understanding how costs behave helps managers make more accurate forecasts and better decisions, especially under different activity levels. By the end of this session, you should be able to define the different types of cost behavior, explain how cost behavior impacts decision making, and apply cost behavior analysis in budgeting and forecasting. Cost behavior refers to how costs change when the level of business activity changes. Knowing whether a cost is fixed, variable, or mixed helps predict future expenses and support budgeting, planning, and performance evaluation as well. Let's go through different types of cost behavior. Firstly, fixed costs will stay constant regardless of activities. Rental is a good example of fixed costs. Variable costs changes in direct proportions to activity. Think about a raw material. The more raw material that you purchase, the higher will be the variable cost. Mixed costs, on the other hand, contain both fixed and variable elements. For example, utility bills are a typical example of this mixed cost. Lastly, step costs increase in steps as activity reaches certain level, such as hiring an extra supervisor once production crosses a threshold. Visually, you can think of fixed costs as a flat line across all levels of activities. Variable costs as a line that rises with each increase in activity volumes. Mixed costs, on the other hand, starts with a fixed portion, then rise. Lastly, step costs looks like staircase, rising at interval. Understanding cost behavior helps in many ways, such as it improves budgeting accuracy and predictions. It also enhances break-even and cost volume profit analysis. It allows better allocations of resources. And lastly, it helps to predict how profits will change when the output level change in the production level. In real-world setting, in manufacturing, raw material costs go up when the output is increasing. In service industry, part-time labors will be adjusted based on the demands of the job. In retail industry, rental will be fixed, but the commission to be paid to the salespeople are variable. In logistic industry, for example, petroleum or gas and fleet maintenance would vary by usage. Several methods are used to analyze cost behavior, such as account analysis, which is based on managers' classification, high-low methods that uses highest and lowest activity points to estimate costs. Scatter plot will use a graphic, to identify the trend of the data. Regressions analysis, on the other hand, is a statistical method that estimates cost functions more precisely using statistical software. Strategically, cost behavior analysis supports scenario planning and forecasting, cost control and benchmarking, pricing decisions and profit planning, flexible budgeting in dynamic environments. To conclude, understanding cost behavior helps managers make more informed decisions. By knowing how different costs react to changes in activity, businesses can plan better, control expenses, and forecast profits more accurately. It is a foundational concept in management accounting with wide-ranging applications. Today, we have learned the overview of cost behavior. And that's end our session for today. Thank you for watching.